let's get started. And we are officially live only on onedealaway.com/live. This is Money Matters. My name is Nev, and I want to welcome you to a brand new episode and where we're talking a lot about cryptocurrencies and how do you value all of that stuff. How do you value where we are in the market? Are we up? Are we down? There's a lot of red news, Red Sea around today when it comes to major cryptocurrencies. But long term, where do we stand? Is it good time, bad time to get into it? Should you get out? And where is the future of Bitcoin? And today we actually have all kinds of news and information to talk about. Where I am saying is patience is the name of the game. You got to be in this thing for a long haul to get in, hodl until you're blue in face, and then hodl some more because we are receiving multiple information, multiple news, and we're going to be covering a lot of that stuff about the fact that where we are right now in the market is very similar to where we were in the market, in the crypto market in 2016. And if you don't know anything about 2016, well, it was kind of a boring year, to be honest with you. But 2017 turned out to be an amazing, amazing year, amazing bull run, where things were sort of like a Sleepy Town, USA. And then all of a sudden we went from Sleepy Town into like a craziest bull market with everybody and their grandmother was jumping in, and Bitcoin went from like a few $100 to about 1,000, dropped in a little bit, and then shot to almost 20 grand. Of course, since then we have come down. We've been toying and playing around, flirting with 3,000 some dollar level. We've gone up to $8,000-9,000 level. We've been flirting lately with 11 and 12,000, and we are kind of down now. I won't lie. We definitely are down at this moment, but is this a time to get rid of it, to get out and forget all about it, or should you be getting into it? Now, none of the stuff that I share here with you is financial advice by any means whatsoever, and I think you already know that, but I have to say it. You have to make your own decisions. What I want to do today is really take a look at the market and what's going on, what the stories are, and how to really evaluate stuff. Of course, we're going to look at some of the altcoins and what's happening in that neck of the woods. What are some of the top staking coins that you potentially could consider, or that others are considering for that matter? And sorry about the noise. Of course, every time that we do recording, there's noise outside. I think that they all sit and wait for me to press the button and to go live and to stream and to record for them to all make noise. So, and I always keep hoping that maybe things are going to be different this time, right? Don't we always keep hoping things are going to be different this time? So anyways, we're going to be talking about the altcoins and what are the good staking one, top staking ones. We're going to be talking about the rise of government-issued digital coins, right? And why that is bad. There's an analyst talking about it, and I understand perfectly. And, how low can this thing go? What are some of the things that people are hodling right now that are bullish, bullish, bullish on that maybe you want to research further? So anyways, full show, as you can tell. I want to welcome everybody watching this live only on onedealaway.com/live. Good morning and welcome. Stay tuned all the way until the end, at which point we'll do a Q&A. For everybody watching this on YouTube or any other channel out there, I welcome you as well. Do me a huge favor, smash that like button so we can help other people, and do subscribe and hit the bell button so you get notified when we put in a new video out. And of course, you're always welcome to join us every morning at 7 a.m. on onedealaway.com. Let's do this. And happy Saturday to you. All right, we have so much stuff to talk about that I really cannot be yapping all around because the episode is going to be like half a day long. And I don't think anybody wants to watch a half a long episode, especially with the same guy yapping about. So let's get into the markets and let's take a look at where we are. So here we go. Bitcoin is at 11.6. As you can see, like I said, It is a sea of red, and I'm scrolling down. This is the top 100. Here and there, you see a little bit of green. Mostly it's red. Now, the good news is that the red is not huge, but it is red. So here we go. Bitcoin is at 11,606. Ethereum dropped below 400. I'm personally thinking it's a great buying opportunity, but that's just me. You tell me how you feel about the whole thing. Um, Tether is Tether. Never mind for that. Bitcoin Cash is down. Chainlink down. Like everything is down. And if we were to take a look at the change on the 24 hours, let's take a look at what's going on. And you will see that we do have some strong performers. Golem is up 33.7%. Augur is up 23%. Icon up 20%. Kusama up 13%. Decreed up 9%. The Central End up 7.6%. Komodo, Nem, Bicom, Cosmos, and so on. So we do have some that are up, not very many. Vast majority of the market is in the reds today. And to help us understand who has lost the most, Swipe seems to be the biggest loser for 24-hour period, negative 16%. Thorchain down 15, Just down 14.8, Loopring down 12, Band Protocol down 10.8, Status down 10%, Amplifier down 10, Monero, OMG Waves, and I mean, it keeps going and going and going. So the market overall in the red, but the question is it all lost for the market? And here is some of the news and information that we have been receiving and looking at, and I think we should consider here on Money Matters. And of course, we talk about money because, well, it matters. So, Bitcoin eyes 10.5 after losing crucial support line. So this is coming out of Bitcoin analysts. A 4-day decline over $1,150 is basically what's going on, and altcoins are suffering even more. Now, question is, are they suffering and losing, or is this a great buying opportunity? It depends from your financial psychology and your belief, and of course the rest of the market as well. But I think vast majority of the market is in for a long haul, and of course we're going to be talking about that in just a few moments in today's episode. I promised to you that we were going to take a deep dive into the Bitcoin analysis of what's coming from Wall Street, from the outsiders, and how they're valuing Bitcoin, and I think that that's very important to us. BTC, Bitcoin, was forming a bullish triangle at 12,000 an upper angle, and even after above mentioned false breakout, the formation was still kept until yesterday. The triangle pattern got broken around 11,700, slid down to 11,600 support, retested the triangle at the time of resistance. From there, the way to another leg back down was quick. And here is the chart that talks about. So here is that 12,000 sort of beginning of the triangle. As you can see, kind of broke it down. It broke it back down here. So as of writing this, Bitcoin found support for the 11.4 level. And on a macro level, the bigger picture is indeed bullish, but there's a warning sign on the macro level as well. There's the yellow ascending trend line, which started forming in July of 2019, and Bitcoin price is now trading below the line for the first time in 10 days. We're going to see that chart in just a moment. We might see a correction to the 11.6 to 11.8 levels, which we are right now. We're about 11.6. Stochastics RSI is at its oversold level on both 4-hour and 1-day chart, and daily RSI is facing huge support line around 50.52. However, until resettling above 12,000, 12.1, in my opinion, the correction is not over yet. The first level of support is today's low, 11.4. If Bitcoin fails to hold, then 11.2, then 11, and then further below, it's 10.8 and 10.5. And here is this chart that he was talking about, and the yellow line of kind of how it broke down. And you can't really see it because it's tiny, but if you really pay attention, right here where my mouse is, you see how it's gone up above this sort of yellow channel, and it kind of has come down, but that's at the top of it. And what do we know about channels? If you know anything about channels and trading, is that when it breaks up, that's typically a sign that it's going to come down. And so, is there a potential that is going to come down into this level? Absolutely. Does that mean you should dump? I don't know. I don't give financial advice. That is something that you're going to have to decide for yourself. I know I am not selling at all. I am going to be buying. And for me, when it drops down to the lower price, it's a great buying opportunity. But then again, that's just me. Water break. Okay, so this is one of the charts and one of the analysis that I wanted to share with you. Here is another one, and this is the part that was really interesting that kind of guides it into that long-term belief of what we could expect from Bitcoin, what we could expect to see happen. And of course, it's there is a little Bitcoin just out cold for a little bit. And so here we go. Ex managing director of Bank of America in the APAC region believes that while there's a long term structural upside for Bitcoin, there will be cyclical ups and downs like with any nascent asset class. And I agree. You cannot expect anything to go up consistently. We've been talking about that. Everything in life, everything in nature, everything, every asset class goes up and down, moves up and down. And it's important for us to understand that it is cyclical, that it's going to hit some highs, and then you're going to have people who get very, very excited, and then they sell because they think that that's the top, and then the price kind of drops down, and people buy, and it goes back up. And so that's kind of what ends up happening with the trading component. This happens in stocks, it happens with real estate. Okay, real estate is not as fast moving. It happens with cryptocurrencies, so it happens everywhere, and especially like Forex. It happens all the time. So it's only natural that during uncertain times, not many casual investors would be willing to invest their life savings in a highly volatile asset class such as Bitcoin. So this is the analyst talking about and trying to explain why we're not seeing as many people jumping in on the Bitcoin train and why they're not investing, right? And so while we are seeing a greater adoption, it is not mass adoption quite yet. And it makes sense that part of it is that people are uncertain, so they're going to try to hold on to the dollars, right? It makes perfect sense. Some of the other ones, because all of that extra, $1,200 a month and so on, that folks that were in unemployment being able to claim that has gone away. So that means that their capital has dried up. So even if they wanted to, they now can't afford to do much of anything. So that's another reason what's going on. The United States dollar has thus far maintained its strength, in part being the world's reserve currency. And as long as countries continue to see US as a global powerhouse, its monetary value will continue to remain strong regardless of the recent stimulus packages. And I agree. This is the part that I was telling you, that it doesn't matter. As long as people believe that it has store of value, that it could do a lot of good things for them, they're going to keep on doing it, and they're going to keep performing within the whole concept of, right, like keeping the dollars, and dollars are going to keep their value. Dollar tends to increase in value during downturns, but that is complicating the assessment of its performance at such time. Now we know that it has kind of gone down. It kind of hit the bottom ish, so to speak, and started to go back up in value as compared to other currencies. Increasing social and political tension, along with incessant printing of dollar, are creating conditions that can potentially form a bubble of hyperinflation. And I do agree with that stuff, right? I do agree that when confidence is lost, when there's a lot of uncertainty, when people don't trust it anymore, when they start pulling out, that's where we're going to see potential challenge and problem for the dollar. And of course, if and when the velocity of money ends up picking up, and typically that is probably going to be combined with some of these geopolitical challenges, as well as the sort of lack of confidence in the dollar. At that point, we could very easily expect way higher inflation. Could it be a super ginormous hyperinflation? Sure, anything is possible. But it's not going to be just hyperinflation all of a sudden. Like, you will see it coming. You will definitely see it coming. It will start trickling, and hyperinflation. It starts slow at first, and then it really picks up like crazy, like you've never seen it before. So it's like Bitcoin in December of 2017 times like 1,000. So you'll definitely be able to see it when it comes. The situation has pushed some major investors like Warren Buffett, the CEO of Berkshire Hathaway, to trim his company's position in banking and investing heavily in stable stores of value such as gold. Now, I do want to point out one thing. We did talk about that stuff, but I do want to point one thing is that uh, 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 tr- Trump, Buffett, not Trump. Buffett is investing in gold miners, not so he's investing in mining stocks, not necessarily in the gold itself. Okay, so that's one thing that you should be aware of and understand. Buffett and his associates are not comfortable with the idea on betting on the long term prospects of the banking industry. And I agree and understand. And I actually have an article as to why some of the stuff is really, really troublesome. One is that they have all these loans that might not ever get paid back, and it's uncertain whether the government is going to step in and bail them out. They might not. We just don't know that. And if CBDCs, central bank decentralized coins and databases and all of that stuff ends up being developed, they likely won't step in to bail them out because at that point, the Fed is going to become everybody's bank of last resort or first resort, and central banks are going to be able to deal with businesses and public directly. They won't even need the private or central banks, and we're gonna or the uh, not central banks. The central banks will not need private or any other banks whatsoever because they'll be able to do everything. And we're going to talk about that in a moment. Some family offices have started to include Bitcoin in their portfolio holdings, and certain neobanks like Revolut and easy access investment apps such as Robinhood have also enabled easier access to crypto. Now, one thing to note about Robinhood is that you don't own the crypto, you're just basically betting on the price. That's it. That's all you're getting over there. So if you want to own Bitcoin, you're going to have to go through a different means. And if you're curious as to how and where, then I invite you to go to onedealaway.com, click on demand, and click on Crypto 101. It's a free course that gives you all of the ins and outs. The next generation of young investors may eventually help spur the adoption of this asset class, and they absolutely will. The future of crypto economy, we're still in early stages. I think we all need to understand that this bull run is moving amazingly well, and it's still super super early. You have to remember that this brand new asset class is just over 10 years old, right? And it's still growing, and it still has high potential and high value to change everything we know. There's still a lot of challenges for the masses. Opening digital wallet or even crypto trading accounts is still not as easy as most people like to think. It's way easier than it was 10 years ago, I can assure you of that, but it's not as easy. And what they're basically saying, and I absolutely agree with it, they were like, look, if you look at the history, it took about 20 years for cell phone web browsing to become as easy as it is now. It took web browsing several years to go from Netscape to where it is now. Ease of owning cryptocurrencies will take some time, and the digital assets age still feels early. It feels like 1995 in the web browser era after Netscape's crash. You know how it was, like the phones, and like you couldn't watch the movies and all these different stuff, and we can do all kinds of crazy stuff now on our smartphones. And I always go back to remind folks of like when credit cards first rolled out. We're all using them now, and it's super easy. You get debit and credit cards left, right, and sideways now, but that all wasn't always the case, and it was much more challenging. And you had those like old-fashioned, printing things that it was like piece of paper, and you put a card, and you had to go back and forth, and then they would send it like it was a pain in the neck. And now it's like tap and go, and you don't even need a card. You just need one of these things, and you're like thumb on the thing, put it in or face into the camera, and it's already doing stuff. So I think we need to remember it takes time for technology. It has a lot of power, but it takes time for technology to evolve, to develop, and to do a lot of great stuff. Now, we just talked about the fact that a lot of the problems are kind of coming in with the centralized banking, right? Centralized digital currencies that are coming out of the banks and out of the governments. And like I said, and I've been saying, they are coming. There's no way of stopping them, but it is highly problematic. And this particular article does an excellent job talking about why. Why the rise of CBDC is bad for your privacy. So, social credit on steroids. You likely have heard of a social credit where you actually go out there and, you get, you maybe say something about the government or government leadership, and all of a sudden they were like, yeah, we don't really like you, so you can't get onto the train or the bus, you can't go into the plane, we're not gonna give you money, we're gonna cut you off from this, that, and the other stuff. And many people are saying, but that's just China, that doesn't happen here. You know what I mean? Like, that's the third world countries, that's them, that has nothing to do with us, that's like whatever, man. But it's not. Look, this is happening all over the place, and it's definitely impacting, all over the country. Even here in United States, if you don't earn enough money or don't do a particular business that the banks like, you can't bank with them. They're not interested. If you need to borrow some money, but in their opinion, what you want to borrow is not large enough, they're not interested in lending you money. And if you're thinking, Nev, you're crazy, of course they are. You haven't been around in business long enough looking for stuff. There are many businesses out there. Let's take a look at the medical marijuana dispensaries. Now, socially, you can feel however you want about it, and that's cool. I think that's great. But the problem is that, while some states approve it, federally, they're still not quite legal. So many of them can't go and use banking for their business. So they're heavily cash and, of course, with cryptocurrencies. Now, imagine if all of the banking is now digital and cash goes away. How do they do business, right? It's very easy for the government to kind of like, nope, not so much. They don't believe in what you're trying to create and what you're trying to build. They just shut you down. Your processing shuts you down. So I think you need to understand that this is one of those things, that CBDCs are everything that cash is not, as they say. Easily surveilled, censored, apported to those that are deemed worthy participating in this new digital technology. And all of that stuff is already here. In the world of CBDCs, government won't even need to learn and lean on third parties like they do right now. They just press a button and boom, you are out of the game. Now, tech companies are going to play a huge role into this stuff, and tech companies are going to become the new banks. And I absolutely agree with it. What they're going to do is develop the SDKs, right? Like these development kits that the banks are basically just going to do and implement. And now they're going to implement the social networks, the chats, the text messages, all of that social network stuff for the payments, for the income, to be able to receive and send stuff. And now, if they don't like what you have to say and you're speaking something that they don't believe in, there away goes the First Amendment in the United States. You're not going to be able to say, well, you already can't, because they already shut you down, right? And flag you and turn you away and all of that stuff. We've seen it. We've seen it in what's going on with the current, beer surplus that is hitting the world, right? But now they're going to become the new banks, providing payment rails to the billions of users and extending their financial services to include loan and credit scoring. And they will attach it to the social scoring. So credit scores are likely going to change and become something very, very different, where it's not just your financial picture, but it's also your social standing. Do you have friends? Are you saying the right thing? Are your pictures just so that everybody can approve of? And tech companies are terrible at protecting data, and I think we all can agree to it. And they opaquely leak it, resell it, and stockpile it in central databases that are a honeypot for hackers. And it won't be just your Facebook account that gets stolen. It will be your entire financial identity and digital banking balance. And that is beyond scary to me. But it gets even worse. The weaponizing of blockchain and weaponizing of money. You've already know, if you have been paying any attention whatsoever, the governments have been using, especially United States, has been using a dollar to weaponize it, to basically say, hey, that country over there, we don't like what they have to say, we don't like what they're doing, we are getting them out of SWIFT. If you don't know anything about Swift, Swift is basically this international way to transfer money. And because US dollar is the international currency, the reserve currency, the currency where all of the international trade is being settled in, maybe not all of it, but vast majority of it, you get cut out of Swift, good freaking luck. You're not going to be able to do much of anything. Then they say, you know what, we're not going to send you any money. We're going to put an embargo in, and we're going to squeeze all of our friends to basically bully them, just like when you were in high school and middle school, where you had all of these cliques. And of course, if somebody was trying to reach out to the nerd or the less worthy or the unworthy person or whatever, right, the leader of the clique would easily embarrass them in public and pull them aside and be like, you want to stay part of this stuff? You want to wear that jacket? You better toe the line, buddy. Don't you be saying anything else. And then, of course, even if you wanted to say something, you didn't, because you were afraid of being ostracized just like the other person. So you kept quiet. So that's what ends up happening, is that, hey, we don't like the country. We put on the embargo. We cut them off the SWIFT. Next thing you know is you are suffocating because nothing is coming into the country, and we are all interdependent on each other on this global trade. I mean, the reason that we're all suffering and having all these issues is because everything was closed down for months and global trade wasn't moving, right? And you were not able to get medicine. You were not able to get masks. You were not able to get, all kinds of different things, food, gas, trucks, parts, windows, doors, like you name it, it was done and over with because of that stuff. So it's a very easy way to utilize that stuff. And so now imagine if it was this permissionless blockchain component with same things that the Bitcoin is using now to allow us to sort of transact and make sure that we're not double spending and all of that stuff. But now it's being severely controlled with one party watching every single one of your moves, 100%. And it becomes the state's primary weapon. And rollout to CBDCs threatens to usher an era of unprecedented financial surveillance and control. And I know most people are like, who cares as long as you're not doing anything wrong? It's not about doing something wrong or right. It's about somebody having so much power and control over everything that they don't like you. They don't like the religion that you have or don't have. They don't like what your opinions and beliefs are. They don't like the color of your skin or the accent that you have or the color of your eyes or whether you comb your hair to the left or to the right, whether you tend to be, blonde or brunettes. They don't like it, they cut you off. It is that simple. That's part of the problem. It's not about doing something wrong and illegal, y'all. And you need to understand this stuff. And, they're basically saying, hey, this is a threat to everybody. They're a threat to private and commercial banks whose revenue is jeopardized by a paradigm where businesses are able to obtain credit directly from central banks issued on permissionless ledger and controlled by one party, right? One party specifically selected. Nobody votes them in, right? They're basically appointed by somebody else, and that's kind of how it all works. Private and commercial banks would struggle to halt the CBDC juggernaut, and they may be good for international payments, corporate loans, and online commerce, but they're bad for privacy. Cash can be digital without being dystopian, and CBDCs must be vehemently opposed. And that's basically the opinion. However, it is not going to go away. These things are definitely coming. So you could oppose them all you want, and they will. And they will lobby on the Hill. I can assure you of that. And the banks will oppose it. And it will be a huge political hotspot thing. Mark my words, y'all. Mark my words, and I'm recording this and posting it out there so that in a few months or a few years, I can pull it out and say, look, on August 22nd, 2020, I told you this is coming. There is no going around it. It is happening, and there's nothing that we can do about it. Now, that brings me to a topic that is incredibly important right now to understand, is that how do you prepare for some of that stuff? And part of the preparation for that is that, while we can't control what the governments do and we can't control what central banks do, and we may have to like it or don't like it, we agree with it, don't agree with it, it doesn't really matter. What does matter is taking control of our own money. And how do we do that? Well, One of the ways is to utilize the current digital technologies that exist. And one of those things, in my humble opinion, not a financial advice, just my humble opinion, is Bitcoin. And here we have a really nice article. And because it's PDF, it didn't allow me to highlight. So none of this stuff is highlighted, but I did read the whole thing. And so I'm going to share this with you. It's coming out of Grayscale. And if you don't know anything about Grayscale, they're one of the Wall Street, basically, hedge fund companies that is also heavily invested in Bitcoin. And I think that they actually have expanded into some other cryptocurrencies, but their main holding is Bitcoin. And basically, they start in and talk about the sort of history of money, right? And what is money and kind of how it behaves. And so they look at the 50-year history, how we went off of the gold standard that basically created that money is debt and it's being printed into the existence. And that is all true. So to create more money, they actually have to create more debt. That is the only way that we can actually go into it. And so they're saying, well, why is it so important today? Well, they're saying it's so important because we are starting to reach this equilibrium or the lack thereof where, we have to print way more debt. The problem with debt is that at first, when you use a little bit, it gives you a huge lift. It's a giant leverage. However, when you start using a lot of it, then it's starting to be more of a burden. So that's the part that kind of has to understand. And what they're saying is that right now, where we are on many government levels, because all currencies around the world right now, government currencies are fiat currencies, meaning other than a decree of the government, there's nothing else backing it. So it's the fact that they tell us that you have to use this to pay your taxes, you have to use this to trade, you have to use this for XYZ, right? That's the only thing that makes it basically have the value. So Bitcoin is important today because of where we are right now within the debt cycle. And if you're interested to learn more about debt cycles, I should probably make this a bit smaller so that you can actually see the whole thing. There we go. All right, I think that that's better. So I hope that that's better for you. Anyways, if you are interested to learn more about kind of where we are in the debt cycle, Ray Dalio, yet another Wall Streeter, is does talk very heavily about the fact where we are in the global debt cycle and kind of how that it kind of goes up, it hits the peak, and it has to crash because remember, I keep saying over and over again, everything is cyclical. So here is the real GDP growth, which is this darker line, and here is the real hourly compensation. And as you can see, up until the 70s, right, even into the maybe into the 80s, there was a little bit of discrepancy. Look at this. GDP growth went through the roof. Our income didn't change much of anything. I mean, it changed somewhat, but it didn't change much of anything. That is highly problematic. And so that's kind of creating a policy where the government started creating this quantitative easing and they started to print money like crazy. And then what happened is that money velocity started to drop. So remember how I keep telling you money velocity is an important concept to pay attention to. So velocity is this dark line, and you can see it's basically since the 1997, 98, something like that, it has been going steadily down. And meanwhile, the federal debt as percentage of GDP has been going steadily up. That is also another problem that they're indicating here, and I absolutely agree with it. Then they've been printing this QE stuff, right? And you can see this was the QE1, QE2, QE3, then QE infinity, and we've been going bonanza printing things even now in 2020 with all of the extra beer around the world served to country and town near you. So that too is highly problematic as well. And so now the question comes in of like, well, how do we think about the Bitcoin value, right? We understand the storyline of why it's so important to maybe consider other investments than just stocks, bonds, and the cash, right? So, of course, gold is one of those things, but digital currencies is another. And so they're saying, well, we got to look at the historic data, historic performance, and of course, none of that is indicative of future relation. So Grayscale basically ended up hiring a bunch of analysts, and they ended up taking a look into, hey, how do we evaluate this stuff and what's happening here? And so what they did is, hold on, maybe it will go away. I'm looking for this to go away. Sorry about that. So they hire a bunch of analysts to say, well, what makes sense to do stuff, and they looked at what Paul Tudor Jones did with his sort of evaluation. Paul Tudor Jones basically said, hey, Bitcoin has a lot of great stuff and what's happening here. So they looked at the financial assets as a whole, cash, gold, and Bitcoin. And Bitcoin total score, was performing pretty darn okay comparing to everywhere else. So, they looked at and compared it on the purchasing power, the trust, liquidity, and portability. And out of everything, cash and Bitcoin, of course, win on portability component, right? Gold does the worst. Actually, I would argue real estate does the worst, but they didn't list it. So with the financial assets, they didn't list real estate. They just looked at everything else but that. So it's not a full picture, in my humble opinion, but it is a good picture nonetheless. Liquidity, cash, of course, wins, and they look at the gold and Bitcoin saying like, I don't know. Financial assets got a little bit better liquidity, but I would say Bitcoin has a great liquidity. You press a button and it's done. So gold a little bit less, but I think it has better than financial assets. That's just my humble opinion. On the trust component, of course, gold is now winning on the trust department. Financial assets apparently are doing better than cash. I don't know how that's possible, but that's just me. And then Bitcoin, because it's so new, because it's digital, because people understand it, I can understand why it's on the lower end of things. And then, of course, we're talking about the purchasing power, and cash is absolutely the worst because it's been declining in the purchasing power over the years. And, the inflation has eaten a lot of its value away. Gold is doing really well with the purchasing power. They're saying financial assets are doing much better than that, probably looking at the historical performance because all of the QE that has been printed has been going into financial assets. That's the only reason why. But other than that, it's really not. That's just, again, my humble opinion. And Bitcoin is doing pretty well. And so he's basically saying, Jones is looking at this and going, saying, well, what really surprised me was not that the Bitcoin came in last, but that it scored as high as it did. It's right here, basically, what he's saying. So let's take a look. Bitcoin had an overall score of nearly 60% of that of financial assets, but has a market cap that is 1/1200 of that. It scores 66% of gold as a store of value, but has a market cap that is 1/60th of gold's outstanding value. Something appears wrong here, and my guess is it's in the price of Bitcoin. So what he's basically saying, hey, take a look at the stuff. Take a look at the market capitalization right here and look at the overall scores. And if we were to take a Bitcoin at 11,000, let's just say that it's 11,000 for ease of math. If it was to start matching the gold right over here, right? If it was to match it, that's 1/60th. Well, multiply 11,000 by 60, and you will get, almost 3/4 of a million price per Bitcoin. Now, you look at the here where we are 207, billion, 207 billion is the Bitcoin, right? And financial assets are 266 trillion. So what is that? 100x? Well, 100x then on the Bitcoin, and that gives you yet another evaluation, and an 11,100x. That's a lot of dinero, right? So do the math, y'all. Pull up your little calculators and calculate it on your own. So that's one metric that we can use to understand. So all of a sudden, 11,000 doesn't seem all that expensive at all. Now he says, well, we got to look at the supply and demand. And they look at the supply metric, and basically supply metric is you look at the active coins and what's going on. And so they look at that stuff and saying, well, the number of speculators keeps going down, and it's pretty stable, and it's been going down, but the number of hodlers or holders, as they say, keeps going up. And it seems to actually be following inversely with the price. So as the price goes up, the number of speculators jump into the market, but the number of holders kind of goes down comparatively on the speaking, right? They're still there. It's just that more speculators jump in. But as the price kind of goes down, the speculators leave and the number of hodlers goes up. And here, kind of what was happening in 2017, we had all of the speculation, right? And then, of course, the price dumped, speculators went away, and hodlers is so right now when you look at it, this is basically who vast majority of folks are hodling onto the Bitcoin. It's then they basically saying, well, how are we doing as far as holding for over a year? And as you can see again, it's very inverse with the price. As the price goes up, right? Because the price is the price is the green line, and the 1 year dormant is the black line. As you can see, that as the price goes up, the 1 year dormant goes down, and vice versa. So what basically means is that those that have a lot of money in it, a lot of value in it, as the price goes down, they actually sell some of the stuff and take the profits out. Then they measure this Bitcoin days destroyed, and it basically says, here is the example that they use. Uh, if John sends Grace a Bitcoin and Grace holds that coin for 10 days before spending it, she has destroyed 10 Bitcoin days. And so they look at that stuff and say, we've had a little bit of spikes, what's happening here, but overall, it's really, really dormant. There's not much happening in the course of the 2010s, 2020s at all. So that's a really bullish sign. On the short-term supply, we saw some of the stuff here, not much happening. So that means people are actually really holding on to this stuff. They're not transferring. They're not using it as much. I mean, they're using it, but it's not the real thing. Then they look at the realized capitalization, and they're basically saying that every time that we get this market cap, right, is up here, then you have the realized capitalization, and then there is this ratio between the two, which is this gray line, and they're saying every time it hits this and it gets into the green, it's an amazing buying opportunity. So, and we've seen that here in the 2019, we've seen it here, and they're basically saying that, that's the part where it explodes or tends to explode really well. Then they look at the stock to flow model, and it's basically saying that it is calculated by dividing existing supply of a commodity by that commodity's annual production growth, and it's used in the community for scarcity for commodities. And they take a look at the stock to flow model for Bitcoin, and here you can actually see it very easily. Here is the model, is this green line, right? And you can notice it kind of goes sideways up, then really up, then kind of sideways up, then really up, then sideways up, really up. So you can see that it's kind of like steps, right? It makes sense. And you can see that it's following really well. Like, it's not 100% perfect, but it follows it for sure. And so here is kind of where we are. Well, what is the next leg? It should go up, and it should be hitting into 2021, maybe into 2022, depending of kind of how things go. One thing that I did notice when I was doing my own analysis of Bitcoin and the prices and the development and stuff is that I noticed that the cycles over here are actually longer. So the bull runs are longer, and they're not as volatile. So they will still go up substantially, but where before it might have been taken 6 months, then 18 months, now it might take 30 months or something like that. So that's one thing to pay attention to. So it's not going to be super perfect, and I think stock to flow model will definitely improve. Then they looked at the Bitcoin held on exchanges. Well, why would you hold money on exchange? Well, if you're ready to exchange it, so that means if you're ready to buy, or you're buying it, or you're ready to sell. And so they look at that stuff, and they're saying exchange balance is actually traditionally low. And sure, it has gone up with the price and stuff, where people are trying to take some advantage of it. But overall, it's down. So that's another bullish metric. Demand-based metric, and they look at daily active addresses, and they look at that stuff and saying, well, the daily active addresses is definitely, super high when the prices kind of go up, meaning there's a lot of activity happening with those addresses. But then, people kind of lay dormant, meaning that there is a strong base of believers into the market who are going to hodl no matter what into this stuff. So that's another important thing. Then you have whales, and whales are basically a number of unique accounts that hold 1,000 Bitcoin or more, which is about $11 million as of likely today. They're saying as of July 30th, but it's as of today because we just saw the price. So it's a little bit more. It's 11.7 today, right? But anyways, so they're looking at that and they're saying it's sitting at an all-time high. Now, another piece to also understand is that one whale could have, right? Every individual can have multiple addresses, so it's possible that that one person could have multiple quote unquote whale accounts. Now, whale index is a little bit on the risky end because when you have now having more of them and having that number grow is very important because when you have one or two that control a vast majority of the market, when they dump, the price is actually becomes very, very volatile. So as more people go in, as more people own it, as more people hodl it, whales are going to become less significant, and we're going to see less of that volatility within the market. And that's where we're going to see a huge stability. And stability is great for the sort of hold of value, right? But when it comes to the trading component, then volatility not so good. But for me, I look at Bitcoin as a sort of value. So right now, it's great because you have a potential to really, 60x to 100x, or sorry, 1200x your money, which is huge. So do the math, and which is insane, right? So anyways, Bitcoin production value. So they look at this stuff and they're look at what's going on with the miners and kind of how they stop out when the coin price kind of drops and the cost still goes in and they have to sell it, so it gets the old miners out, and they're saying this is really good, and it is really good. And miner profitability ratio, so this is another one, and they're saying every time it hits the little green things where my mouse is, that's a great buying opportunity. And look at this, 2020 has been a great buying opportunity. In conclusion, they're basically saying that we are seeing a lot of demand for something different and people wanting to escape out of a lot of uncertainties and expose themselves to many different asset classes that could protect them. And they're saying that the current market structure is reminiscent of early 2016, the period that preceded Bitcoin's historic bull run. Bitcoin continues to command global investor attention, and there is a scant supply to meet growing demand, and the infrastructure is now in place to satisfy that demand. With the techniques outlined in this report, investors can now measure Bitcoin's network growth and more confidently assess its value. And that is absolutely huge. And of course, Bitcoin does have risk. There is a lot of stuff about the market adoption, the price volatility, the government regulations, the security, the tax treatments, right? We cannot forget that stuff. The fact that you have no shareholder control, but then again, if you're a small participant in many companies, you have zero control anyways, so who cares? Lack of liquidity and transfer restrictions. It has some, but not as much, and potential reliance on third-party management, which could be component unless you hold your own stuff, right? And utilize DEXs, decentralized exchanges, and your own personal wallets and that kind of stuff. So fees and expenses could be very interesting. So that's kind of where some of the risks exist. But overall, it's incredibly bullish report. And again, it's taken out of grayscale market. Final piece that I do want to share with you is two more articles. One of them is an analyst saying that he is hodling onto one altcoin until it hits $10,000, and he believes that YFI, Yearn.finance, is that coin, and that he is going to hold it until he can. This is what the website looks like. So if you can go in and just click on anything, you'll be able to get some of the stuff. But this thing is so darn new that when you click on it, it basically is saying, hey, it's still being worked on. So to me, it's like, I get it. I love it. I don't know that I would bet my farm on it. But hey, if you want to jump into it, this is one coin that has actually beaten the price. And I don't know what the price is right now, but you know how to research it. Simply go to the Coin Market Cap or CoinGecko or Coin Paprika or whatever and just look it up. Look it up. You'll be able to find it. So that's the part that he's like, nope, I'm holding it. And I'm like, okay, cool. Another altcoins that are the top ranked by network staking activity that you might want to do a research and consider. And we actually might do some of that here tomorrow on Money Matters. We'll see where the news take us to look into some of these things. So Cosmos is one of those, and it's getting a lot of attention in recent months. It nearly 94% of the network engaged in actively staking the crypto. Synthetics is another one with 83% of the users engaging in staking it. Tezos, pricing wise, not doing as hot, but nearly 80% of the network remained engaged in staking. And Algorand is the one that is actually picking up and getting a lot of attention. And we might look into Algorand, if not tomorrow, in the near future. They're keeping 73% of the users engaged in it. And Zcoin is 72.9. It's an altcoin that is on the security, and it's not getting a lot of attention because privacy coins, fork of privacy coins, often tend to lose traction very quickly among alts. So there you go. Staking is the name of the game, as is farming, as is ability to give people the biggest return. And that's what many of these projects are looking to do. Now, my question for you is, are you hodling? Are you selling? Where are you in this market and what do you believe? I personally believe that in this particular bull run, Bitcoin does have a very easy potential to hit at least $80,000 a coin, more likely higher than that. But in the long term, I easily can see a Bitcoin being over $1 million. But again, not a financial advice, just my sort of educated guess based off of everything that we have been able to talk about, discuss, and find out. So let me know in the chat, let me know in the comments where you are, what you think, and what questions you may have. Do me a favor, smash that like button right now. Do subscribe, do hit the bell button, and I will see you tomorrow. Until then, stay forever money blessed, and do remember, you are only one deal away.